If you're watching this video, it's probably because you want to know the answer to the question, when should I start investing? And if you're actually asking that question to yourself, I'm assuming that you haven't started investing yet. So basically in this video, guys, I really want to drive the point home that, why investing is so damn important. But also, whether investing earlier or later actually makes that much of a difference. And if you stay till the very, very end of the video, I'm going to reveal something that, not many people in the investing world talk about, but it's one of the reasons that I personally invest. Hey guys, how's it going? My name is Ricardo Torres and I am a dividend growth investor. I am really, really passionate about investing. In fact, I'm building an app on my computer about investing. I absolutely love it. So I want more people to really fall in love with investing, and that's why I'm making videos like this. But enough preamble, let's get straight into it, guys, okay? When should you start investing? The quick answer is yesterday. You should have started investing yesterday because, as they say, you might have heard this expression before, but time in the market really beats timing the market. Trying to guess or getting in at the bottom of the market and riding the upward trends. What actually matters is time in the market, staying inside the market. And that's due to the power of compound interest. Compound interest is an insanely powerful force of the universe. It's a mathematical force. And it's the reason why multimillionaires and even billionaires have actually got there. Okay? So in order to show you what I actually mean, okay, and why it's so important to start investing as soon as possible, I'm gonna give you an example on my computer. So let's go straight in there. Okay, so right now, all I've done is just Google a simple compound interest calculator, okay? There's a lot of them. This is the one that, in my opinion, looks the nicest, okay? There's some that actually look quite, 1999 kind of style, but this one looks pretty good. And the default example that it gives you, I think I've actually changed the regular invested number, but I'm gonna give you quite a simple example, okay? Let's say you're someone that has $10,000 to invest, okay? You've been saving for a while, you've got $10,000, whether it's less, whether it's more, it doesn't really matter, guys, but $10,000 already saved. And let's say that, with what you save from your job, you can also invest $500 every month, all right? Now, over here, you'll notice that the interest rate, okay, that's the rate at which, your investments, your wealth compounds, okay? So it's not a fixed amount, it's 8% on the previous amount, okay? So, I'm completely rushing what compound interest actually means. I've got a video about compound interest, just have a look at it or Google compound interest. But basically, this is exponential, okay? And 8%, if you actually look back hundreds of years in, pretty much any stock market, that is the long-term kind of growth of the overall stock market, okay? So it's a pretty realistic amount, okay? 8% per year. And yeah, we're gonna say just 10 years, okay? 10 years starting from now, right? This is how much you would have. With just that investment, okay, $10,000 and adding $500 every single month, after 10 years, you would have $112,000. That's those $500 that you've diligently kept contributing, kept investing every single month, all right? That actually makes up the bulk of what your investments will be worth. But I want you to notice the gray area here. That's your interest. And, you can call it interest, you can call it capital gains, you can call it, capital gains plus dividends, all right? It's basically how much that money has grown, okay? The amount of money that you haven't had to actually put in yourself. And after 10 years, it's less than half. It's about 45%. But you can actually see that amount, okay, the amount of interest grows every single year. Because remember, your contributions are static, okay? You're only, at least in this example, you're only contributing $500 every month to investing. But the interesting part and the really, really powerful part, as you'll see in a second when I increase that time from 10 to 20 years, is that the amount of interest, the amount of growth that you actually get grows exponentially. Okay, let me show you what I mean. So if we go back up to the top and we change this term from 10 to 20 years, okay, just to show you the difference that 10 years makes. This is how crazy it is. So instead of $112,000, over here, we've already got $332,000. And at this point, we've already gone past the point where the majority of that money that you now have, okay, that your net worth, the majority actually comes from the growth of your investments, which is, it's really the point where you want to get to, okay? And the longer that you leave this, the more that your investments actually work for you guys. That's why I'm so passionate about investing. That's why I started investing relatively early in my life, in my 20s. I could have started a lot earlier, to be honest. But definitely when I have kids, I'm going to teach them to invest straight away. And in fact, I'm going to invest for them at the beginning, just so that, as much time as possible can pass and their investments can grow that much more. Now let's go a bit crazy and let's change this to 30 years, okay? And like I said, it really is exponential. At this point, more than 3/4 of the amount of money that you would have, okay, if in this example, doing nothing crazy, okay, $10,000 and $500 every month, 75% of your of the value of your investments would actually be from the growth of your investments, and your overall amount would be $800,000, guys. So this is why you need to invest as soon as you can, okay? There are some things that you should definitely do before you invest, and in fact, over the next couple of weeks, I will release a video about the 3 things that you need to do before you start investing, just to really be financially set to invest and really let time do its work, guys, because that's really the key to investing. You have to invest in the long run. Like in this example, nothing I've shown you is that extraordinary, but most of the work is actually done by time and by investments, by your stocks doing the hard lifting for you. All right, guys, so hopefully now I've shown you the real power of investing as early as possible and, letting your investments do their work for as long as possible, right? Because that's really, like I say, I keep saying this, but it's exponential. The more you leave it, the more crazy it gets, all right? So really the sooner, the better. And this is the point where I actually want to show you the little bonus tip that no one really talks about that much. And in my opinion, it's possibly the most important thing that I focus on when I invest. By the way, and before I tell you what that is, if you're enjoying this video, please give it a thumbs up in the YouTube. Just tell the YouTube algorithm that this video is worth sharing and it's worth watching. And also, if you haven't done so already, please subscribe to my channel, okay? I release weekly videos. I've not been that consistent lately, to be fair, but I've really taken it upon myself to release weekly videos, okay? But with that out of the way, let me tell you what that thing is, okay? It's called generational wealth, guys. And what generational wealth means is not just the amount of money that you can make during your lifetime, okay? Because hopefully that's not the only thing you care about. Presumably you have children, or you've got loved ones or family members, maybe even friends, okay? And, by the time that you die, okay, when you're hopefully, fairly along in life, it's the amount of wealth that you can actually pass on, all right? And this is really how really rich families gain their wealth. It's not just accumulated in one generation, unless you're, Jeff Bezos or Bill Gates and you start a company that becomes a multi-trillion company, well, multi-billion company at least. That's not really how, historically people have, or at least families have generated wealth. Wealth is built after, generation after generation. And I'm going to show you what I mean in a second, going back to that compound interest calculator. But I just want to show you, that don't think about investing about, just what you can make in a year or 5 years or even 10 years, okay? First of all, think about it as your nest egg, which is what it is, okay? It's an amount of money that you can rely on, that's always there for you. And yeah, sure, it will fluctuate up and down every now and then, but over time, at least historically, if we look hundreds of years in the past, the stock market does go up pretty consistently, all right? But yeah, don't just think about that. First of all, think about your retirement, or when you're older, when you're elderly. Let's say you've got a really big medical expense. Let's say that you're in your 60s and you lose your job and you're not ready to retire. Well, that's why all this money is worth it. And then once you get to that point, once you've retired, once you've actually pass on, right? Once you die, you can pass it on to your children and your grandchildren. That's really how generational wealth is built. So let me quickly show you what I mean, going back into the screen right now. All right, so now we are back to that compound interest calculator. And this is the point where I'm going to go a little bit crazy with the number of years, okay? Because the last you saw was 30 years in the market, 30 years growing at 8% every year. But watch what happens when we increase this to 40, okay? Instead of 800,000, all of a sudden that's 1,800,000, right? If we then increase that to 50 years, and again, you know, for most of you watching this, in 50 years time, you'll either be dead or you'll be pretty close to, you know, being really elderly, okay? At this point, it's mostly your children and your grandchildren that are going to benefit from this. But this is how crazy it is, guys, okay? With just $10,000 and $500 of monthly contributions, without even increasing them, you would have a portfolio worth $4 million. And, you know, about 90% of those gains would have come from the growth of your investments. But let's say, you know, you want to look even further along. You know, you really want your surname to be a dynasty, okay? You really want to have that generational wealth last for many, many generations. Obviously, at this point, it wouldn't be you contributing those $500 every month. It will be your children and your grandchildren. But let's change the number from 50 to 100 years, because that's what you really see the ridiculous power of compound interest, guys. Look at this, right? You can't even see the amount of money that you invested. Even those contributions are so puny that they really pale in comparison to the growth of your investments. And at this point, you would have almost $200 million, which sounds really ridiculous, but it's not actually that ridiculous, because none of this is actually that extraordinary. These gains, okay, 8% a year, are just historical gains. So you don't have to do anything that exciting, okay? Just invest in an index fund that tracks the market. And you should be able to get these results. Obviously, the hard part is, you know, waiting 100 years without selling your stocks, or, you know, without needing to extract the money for something crazy, right? But either way, you should really have an emergency fund anyway. So yeah, guys, hopefully you found value from this video. Hopefully I've been able to really convey the fact that you should really start investing as soon as you can, because the longer you stay invested, the crazier and you know, bigger the results are going to be. So yeah, guys, if you really enjoyed this video, just again, make sure to give it a thumbs up. It's really going to help my channel to grow, which is why I dedicate hours and hours to film and record and edit these videos. So that would be awesome. And also, if you could please subscribe to the channel, okay? If you've enjoyed this, guess what? A lot more of this is coming over the next few weeks and the next few months. So yeah, with that being said, I will see you in the next video. Okay, have a really, really wonderful day. And yeah, I think I'm just gonna go walk my dog. So I'll see you later.